going on with the PPP, the EIDL, and all things pandemic craziness that were going on. And so timing is perfect now that the hopefully the election will be over. I think it will be at some point. So hopefully at some point, whether it's the next few days or few weeks, this will come to a conclusion. And as we start moving forward with our business and thinking about what's next here going into 2021. So we wanted to bring Jamie back to talk about how this loan forgiveness is going to work or isn't going to work, what is going on with the loan application, the various requirements, banks, and she's got a whole lot of information to be sharing with us. So for those of you that are tuning in, my name's Tom Dufour. I'm the CEO with Big Sky Franchise Team, and we help companies to expand and franchise our business and help them go to market. And this is part of our Navigating the Coronavirus Economy series. We are on, I think, week 30 something in doing this and bringing timely experts in to share information with you. So as we've had people tune in, Jamie, you want to give a thumbs up or a head nod if you're ready to go?
I am all good.
All right, great.
Good.
Perfect. Well, then I will turn things over to Jamie. Thank you again for being here. The floor is yours.
All right, let's go. So I'm glad to be back. Thanks for having me, Tom. It's funny you put it like, what I think you said week 36. Is that what you
Yeah.
said? It feels like an eternity.
Yes.
But I do feel like we have made a lot of progress. You know, we have a lot more clarity than the last time that I was here talking with you guys. So things aren't moving as, second by second, which is a good thing, right? Because for a while it was very much a fluid movement. Now, there is still some potential movement. I'll touch on that towards the end of what things could still change. But we want to talk a little bit about PPP loan forgiveness now, right? So in the beginning, we were talking more about what is the PPP loan? How do we get this? We talked about that several months ago. Well, now a lot of you guys, if you're here, you probably got one and you're probably wondering how the heck you get this thing forgiven. So I'm actually going to really quickly, hang on, share my screen. I don't know if you're able to do it. Give me 1 second to find you guys again and try to share. Give me just 1 second. Okay. I've been having some computer issues this morning, so I apologize. Okay, I'm going to share my screen. Desktop 2.
And as she's getting that loaded up here, everyone, please, as we're going through, feel free to type some questions into the chat box, and we'll make sure that we get those addressed as well.
Okay, can you guys see my slides now? Great. Yeah. Okay, so this picture on the front is just because this is how you're going to feel when you get that PPP loan forgiven. That's what it's going to feel like, I feel like. And some people I already know have, and that's kind of how they have felt. So, okay. So let's kind of level set on what are the things that can impact your loan forgiveness in the first place. So I think that's really been the question that has been on everybody's mind is, okay, I got this loan. I think I'm doing everything correct. There's a lot of different guidelines, a lot of different moving parts, but what do I really need to do to make sure that I can get my loan forgiven? So let's go through those kind of overarching guidelines. So the things that can impact your forgiveness amount are, if you don't spend the whole thing, obviously, you need to spend all the money. If you don't spend all the money on approved expenses, you're not going to get the whole thing forgiven. You also will have your loan forgiveness reduced if you don't spend at least 60% on payroll. Okay, so that's a really important part of this, is making sure that you're spending that 60% on payroll. That does include your own payroll. Now, if you're a sole proprietor, if you don't have any employees, this 60% doesn't really apply to you in the same way. But if you have employees, you need to make sure that you have spent at least 60% of your PPP money on payroll. The other thing that can impact this is that your loan forgiveness can be reduced if you don't keep up your full-time equivalent, your FTE headcount. So there's a lot of rules that go into calculating this. I'm not going to get into that in detail. I'm going to talk to you in a little bit about some resources I have if this is something that you're concerned about. But basically, there is a comparison period that's pre-COVID, and then essentially your 8 or 24 weeks. Most of you guys are probably choosing the 24 weeks because that generally makes the most sense. So if you do that, you need to make sure that your FTE count is basically at or above what it was before. And if it's not, you can have your forgiveness reduced. Now, you won't necessarily have it reduced. I'm going to talk about some of those kind of, they've added what basically has happened over time is that they've made it kind of easier and easier to get forgiveness. So these are the general rules, but they've put a lot of exceptions out there. So the thought process I have is that pretty much everybody should be able to get their loan fully forgiven as long as they are aware of these rules and apply at the right time. Additionally, your loan forgiveness may be reduced if you decrease annual salaries or hourly wages by more than 25%. And that's on an employee by employee basis. Importantly, my read on this is that that's only base salaries. So they're talking about, $15 per hour, right? If you continue to pay, even if their hours went down, that may impact your FTE count, but that won't impact you on the salary, hourly wages side, right? So I think a lot of people were worried about that they had less work. Maybe they were commissioned employees and there was less work. Do they need to make up that difference? My read on the guidance is no, that's not what it says. Their base annual salary or hourly base wages just need to stay the same or not go less than 25% of what they were. So those are kind of the watch outs, right? So if you've kept the same number of employees, you haven't touched their salaries, right? You're likely fine. But they've even added some additional things onto it, which we'll get to here in a little bit. The other question I get a lot of people, and I get this entirely, is that everybody wants to apply right now. And they're mad because some banks, your bank may not be accepting applications yet, right? So in that case, I just want you to kind of have some peace of mind. You have 10 months. You have 10 months from the end of your 24-week period. Okay. So you've got a long time before you have to apply, before you're going to have to start paying on that loan. So if your bank, I have heard of some banks coming and trying to start collecting already because the original guidelines were 6 months from when you got the loan is when your payments would start being due. That changed in June. So importantly, if your bank is one of those that's coming to you and saying, hey, you're getting some automated messages or something from your bank telling you that your payments are due, they are not. And you need to write back and tell them, based on the PPP Flexibility Act that was passed in June, actually, I have 10 months from the end of my 24-week period. And that's all guidance that can be found. There's an FAQ on the Treasury website as well. So if you go to treasury.gov and you go to their entire section that's all about COVID-19, it will have that FAQ that you can send over and say, hey, look, they're not due. But believe it or not, some banks didn't get the memo on this and are still, operating under the fact that your payments start at 6 months, but they do not. You're under no legal obligation to start paying them at 6 months. Also, you are accruing interest right now, but if your loan is forgiven, your interest is also forgiven. If your loan is partially forgiven, the portion that related to the part that's forgiven is also forgiven. So I think that there has been some confusion there that people are still going to have to owe interest even once their loan's forgiven. That's not true. So there's not really an incentive there to apply early either. So you have 10 months. So if your banks are still waiting, because some banks are thinking, well, there may be still some changes in the future on this that we may have where in the next stimulus bill that has been discussed for several months now, if anything does get passed with that, there probably will be some changes, and those changes will only serve to loosen the guidelines further. So they're not going to get harder. They're only going to get easier from here on out. So if you wanted to, waiting may be the way to go. And I'll talk about a couple of reasons that might not be the case here in a little bit too, because there are some exceptions to that. But in general, you have 10 months, take a deep breath. It's going to be okay. But I do also know that feeling you get when it's actually forgiven and how just mentally freeing that can be. So I definitely appreciate that for people. Okay. So PPP loan forgiveness process. This is something I've gotten questions on too. Because there are several different applications, we're going to talk about that in a minute. People are wondering, okay, do I apply with the SBA? What do I do if my bank's not taking applications? Am I supposed to download this application off the SBA website, send it to my bank? Here's generally the process. You will apply for forgiveness through the bank that you got your PPP loan from. Now, some of them farmed it out so that your bank may come and give you additional instructions of where to go. But in general, it's probably in most places going to be through a banking portal that you will go, similar to how you applied, where it will go and ask you questions. Those questions may or may not look exactly like what the forgiveness applications look like. So that's just something to note. I'm going to talk to you a little bit about the forgiveness applications here in a minute, but ultimately they should be asking you those same questions. Each bank is probably going to be a little bit different in how they do it and how they kind of plumb their system, but do know they should be kind of sending you to the right application on that banking portal. We'll talk about what those different applications are and who fills out each one in just a minute. So you're going to apply through your bank. You're going to send in the documents that they request of you to your bank, and that will differ depending on which application you use. And then the bank has a maximum of 60 days from the time they took your application. Now, if they're not taking your application yet, you can't just send it to them and the clock start. I know some people have tried that, but it doesn't really work that way. It has to be 60 days from when they actually officially accepted your application. And then they will tell you, usually they should communicate with you and say, hey, we think it's forgiven. Now we're sending it to the SBA. Some banks may wait till it goes all the way through the process before communicating back with you. So if you don't hear in that 60 days, it may be because your bank just sent it on to the SBA and they're waiting on the SBA to make that final decision. The SBA has 90 days to review those applications and make the final decision. Then they tell your bank comes back and tells you, yay, you throw confetti, you drink some champagne, and you're good to go. So that's really what the process will look like. So it should all be done, within a 5-month time frame from the time that you apply. Most people I'm hearing are actually getting through that faster, and I think it will only get faster from here. Now, if you wait all the way to the end of the 10 months and everybody's trying to get theirs in right before the end, it might backlog a little bit, but right now it seems like most banks are doing it within a couple of weeks and that the SBA is getting through it within about 3 weeks or so. So I do have people that have gotten their loans forgiven at this point. So that's exciting. For a long time, the SBA was just holding on to them and not doing anything, waiting on Congress as well, like the rest of us. And eventually they just decided to start processing through. So they are processing those loans. Okay, next. What do I need to apply for forgiveness? So there's a lot of different things that you may need. And again, like I said, it will kind of depend on which application of the 3 different applications you have to fill out. We'll go into which one here in a minute, but you're going to need essentially proof of all the money you spent, everything you spent your PPP on, right? So that is looking into your payroll reports. Obviously, they're going to want to see your bank statements to verify those funds. So if you're paying yourself, let's say you're an LLC sole proprietor and you don't pay yourself payroll, they will still likely want to see proof of transfer of payment from your kind of business banking account to your personal, let's say. Some banks won't require that. Some will. You should have it anyway. And they're going to want to see the rest of those payroll reports if you spent any of your PPP money on rent, utilities, et cetera. Now, if you spent the whole thing on payroll, right? If you had enough payroll during that time period to cover the entire PPP loan, you don't even have to put in the information on your rent, your utilities. That's only if you actually used your PPP money for it. So I think some people were confused there too. That's something you just use what you use it for. And I think the easiest thing, if you have enough payroll in that time frame, that's probably going to be the easiest thing to do rather than having to pull your lease agreements and all of that. I would just try to get it forgiven fully on payroll, unless you don't have enough payroll to get your loan fully forgiven. Then you're going to need to add some of that other stuff. Remember though, that other stuff can only add up to a total of 40% of your loan. So you're going to need all that support. You may need support for your FTE count as well, your full-time equivalent employee count, right? During your 8 or 24 weeks, you may need that, and you may need support of the salary and hourly wages. Those calculations are only required to be turned in if you do the full forgiveness form. So I'll show you in a minute. Hopefully most of you guys can get around having to do the full forgiveness form, but if you don't, it's going to be more of an arduous process to get all of that together, but I have some resources for you. So, okay. So let's talk about these 3 different applications, shall we? Like I've said, we have 3. So that's what continues to happen in this process is we had one, then we started with the full one. Then they made some exceptions and created an easy form if you met certain requirements. And now, just more recently, the Treasury has come out, because basically Congress didn't come out with anything. The Treasury came out with a new 3508S. I don't know why that one has a number. The other ones are called easy and full form. I don't know, but that's how they've done it, just to make it as confusing as possible, I think. So if you're confused by this, you are not the only one. It doesn't make a lot of logical sense sometimes. But the 3508S is something that is for loans only if you got a loan under $50,000. So if you got a loan under $50,000, you can automatically, or 50,000 and under. So if it was exactly 50,000, you can use this as well. 50,000 and under as the original value of your loan, you get to use the 3508S. We'll talk about it on the next slide. If your loan's above 50,000, but you meet certain requirements, you have a streamlined report application that you can use, and there's less documents that you need to provide. That's the easy form. So start with the 3508S. If that doesn't qualify, go down to the easy. If that doesn't qualify, you're in full form territory, which is not the most fun, but it is doable. So we'll talk about it here in just a minute. Okay, so I took a screenshot of just the 3508S. So this is the newest application. This is for loans of 50K or less. Notice this is all of the numbers you have to put in this thing. So this is the whole application. Other than below this, you're also going to have to do a bunch of certifications. So importantly, with PPP forgiveness, I am not expecting the banks to do a ton of additional work on the ticking and the tying and the looking at the reports and really scrutinizing things. They probably won't, especially if your loan is under 150,000. Definitely if your loan is under 2 million, right? So I would not expect that. They put the onus on you as the borrower. So underneath this, when you actually go see the actual application, there's a ton of certifications that basically say, I used the loan correctly. It's not fraudulent. I didn't pay myself more than the limit, which is 2.5 months of payroll based on 2019. There's a lot of things you sign off for. You did the FTE count correctly. Everything that, for 3508S, you're certifying, basically you certify your life away on all of these. So to say you are the one, not the bank. The bank's not the one they're going to come after if this is wrong. It's going to be you, the borrower. So you're the one making these certifications. So make sure to read them. I know I'm that way too with legal contracts. I'm like, yeah. Okay, sign. Read what you're signing and make sure that those are things that you can sign. Okay. And hopefully they are. If you've done your best to use it correctly, they probably are things that you can sign with no problem, but I do want you to read those certifications. But from a numbers perspective, this is all this is asking you for. It's not really a lot, right? So that's the whole application, and you don't have to prove your FTE count. All of that goes away if you have a loan 50,000 and under. That was the new thing that came out just a couple of weeks ago, that 50,000 and under, you don't have to worry about if you laid off half your staff, it doesn't matter. If you decrease salaries, it doesn't matter. None of that applies to you. Basically, the Treasury came out and said it's de minimis, that they are not going to make people with the smaller loans go through that process. I think it's a good change. It prevents you from having to hire an accountant and do some crazy calculations for a smaller loan. I wish they had done this for 150K and under, but they did it at 50K, and that's something at least. So for some of you guys, hopefully you're like, sigh of relief, awesome. If that's you, like, I'll see you later. Go, go have a glass of wine, go celebrate, you're good. So.
Right. And Jamie, really quick, yeah. a quick question just came in that says this is for someone at this tier, under 50,000 funded, self-employed, and it says that the person says they were overfunded based on the criteria because it was unclear. And the question is, I've used the eligible amount. Can I expect to keep the full amount or likely have to repay the overage?
Yes. So that's a great question. And I've gotten that a lot because a lot of people, specifically self-employed people without employees, did get overfunded. A lot of times that happened because they used maybe your gross payroll instead of that net number after expenses to do your calculation for your loan. So that did happen to a lot of people. For you, one of the things that you have to certify on that certification form is that you didn't pay yourself more than 2.5 months worth of payroll. meaning you have to go back and look at that Schedule C for you. If you're an LLC sole proprietor, you're probably a Schedule C. And you're going to take that Schedule C line 31. Some of you guys never looked at a Schedule C, and now you're like, oh, I know that you've memorized line 31 of your Schedule C. That's your net profit. You're going to divide that by 12, multiply it by 2.5. So I'll say that again. That's line 31, Schedule C, net profit. You're going to take that number, divide by 12, multiply by 2.5. That's 2.5 months of your payroll as the owner. That's the max you get forgiven for paying yourself. Now you should, again, actually pay yourself just to have evidence of it if your bank needs it. It's kind of silly. If I have a whole tirade I can give you about why I think that's silly for a sole proprietor, but that's the total amount you can pay yourself and be forgiven. You can pay yourself more than that, but it won't be forgiven. So if you, let's say you got a loan for, $20,000 and your max that you could pay yourself is only $15,000, right? Let's say you've now got $5,000 that you've got to go spend on rent, utilities, any other of those types of expenses if you have them. They have to be things that you write off on your taxes as business expenses. So as long as you have enough of that, then you should be good. If you don't, there's going to be a portion you're probably going to have to pay back. But how that's going to work, I'm curious to see. Because if you can't sign that certification, right? I guess the way that works is that really the number you put down as the forgiveness amount right here on this 3508S is actually less than your total amount, right? In which case the rest turns into a PPP loan. Now, I would talk to your bank about that situation and just see if they have any other thoughts on that. But the way that I read the actual guidance, that's ultimately what would happen, right? Is that any amount that you didn't spend on those eligible expenses that's above and beyond the maximum you're allowed to pay yourself, that's not going to be forgiven. So I would assume that that's the case. Could that change? If that's you, hold on. If you don't have enough, wait for the next stimulus, because it is not impossible that they simplify this even more and that they just kind of say, okay, we're done. You might have a box to come check. To get it forgiven at your bank, but there isn't much more for those very small loans. So if that's you, hold out, wait and see if anything changes before applying and having an amount that's unforgiven. But ultimately, that's the way the rules work now. Does that make sense, Tom?
It sure does. Thank you very much. Thank you.
Awesome.
Yep.
Awesome. Very good question. Very good question. Okay. Sorry, there's a little bit of a bleed here. So on the easy form, the easy form, it's meant to be easier. So we're working it up, right? 3508, if we're under 50K, that's the one you use. 50K and under, you use that other one. If you're over 50K, okay, now we go to the easy form. Let's see if we can use this. Hopefully we can, because it's going to make our lives a whole heck of a lot easier if you can use this form. So this form, there are basically two, you can see it's kind of delineated where there's two different requirements. At the top, you have to check both of those things, and then you can check that first box, or underneath the line, there are two other requirements. So if you meet one of those, either the top or the bottom, and you can check one of those boxes, you can use the easy form instead of the full forgiveness form, which, believe me, you want to do. It will just simplify things quite a bit. So I will say the way this easy form application is written, you probably will have to read it a couple of times, but I'll try my best to explain the way that I read what this is saying. So it says the borrower did not reduce the annual salary or hourly wages of any employee by more than 25%. So remember, that's that salary, hourly wage, more than 25%. We talked about that. During the covered period, so that's basically your 8 or 24 weeks, compared to the period between January 1 and March 31. Now, this was kind of random. I don't know where they came up with this time frame, because it doesn't really jive with anything else in any of the requirements. But basically, they're saying between January 1 and March 31. Okay. So as long as you did not, so if you look at that January 1 and March 31, as long as you didn't reduce the annual salary or hourly wages, remember we're talking about base wages here, by more than 25%, then you can check that box, right? It's written just on a very weird. Now, if the employee was making over $100,000, then this doesn't. You can actually reduce their wages if they were making over $100,000. This also does not apply to owners, so that's important. Some owners reduce their own pay because they didn't have enough in profits to be able to pay themselves. This doesn't apply to you. This is to people who are employees for your business outside of owner employees. So then the second one, so let's say that applies to you, and you'll notice, like, look at the top and the bottom, above the line and below the line, the first bullet for both of those is the same. So that hourly annual salary or hourly wage reduction requirement, you have to be able to check that for either one. If you can't check that at all, you're going to be over on the full form. If you were reducing actual salaries, if somebody had a $60,000 salary and then you reduce it down to 30, you're going to have to do the full form. So hopefully, I haven't seen that really being a big sticking issue though, because most people just either reduced the number of hours their employees were working, didn't actually say, well, you were making $17 an hour, now you're making 12. That didn't seem to happen as prevalently as actually just reducing hours because there wasn't work, right? So let's talk about that, because that's the second bullet here. So it says the borrower did not reduce the number of employees or the average paid hours of employees between January 1st, 2020 and the end of the covered period. Okay. So the borrower did not reduce the number of employees or the average paid hours of employees between January 1st and the end of the covered period. Remember, end of the covered period is the end of your 24 weeks. So what's kind of interesting here is that makes it sound like you didn't reduce them at all, right? Which most people probably did. When you read the rest of this, you'll see it, because it goes into saying ignore reductions that arose from the inability to rehire individuals who were employed on February 15th. If you weren't able to get similarly qualified people, also ignore reductions in an employee's hours that the borrower offered to restore and the employee refused. So what this is really saying is, if you laid people off, right? We shut down for a while. Maybe you had your PPP loan when you were completely shut down. That's fine. Of course, you reduced their hours then. You might have even laid them off. As long as you rehired them by the end of your covered period, you could use this form. Okay. So that's important to know. As long as you rehired, and there are some exceptions. So if you couldn't rehire because, and it says here, you couldn't fill it because you were unable to rehire a similarly qualified person, and you offered to restore an employee and they refused, then that can kind of get you out of that. So even if you lost one or two, you may still be able to check that box if you have documentation of one of those exceptions. So it gets a little dicey, right? There's a lot of technicality in here and it's not overly clear. But what this really is trying to say is, as long as you hired them back by the end of your covered period, that was really the point of the PPP loan, right? Let's think back to like when this whole thing started. The PPP loan was meant to say, okay, businesses are shutting down. Everybody's going on unemployment right now. We need an incentive to get employers to rehire employees and bring them back on payroll. And so they want you to keep your FTE count over that whole period of time, right? But if you didn't, as long as you rehire them by the end of your covered period, you can check this box and you can say, okay, we're good. We don't have to worry about the FTE count anymore. Additionally, so that's kind of what you want to see if you can do that. Now, if you still can't do that, if you laid off your employees, you don't have the business. A lot of, maybe you're in the entertainment industry and you just haven't needed those employees back. A lot of restaurants, right, haven't needed all their employees back because they've been at reduced capacity. If that's you and you can't check that second box, you might still be okay. Okay. I know there's so many things, but you might still be okay. So let's go down to the second bullet of the second box here. All right. I hope you guys are staying with me. I know y'all are wanting to run away. I get it. We need like a coffee break in the middle of this. But what it says is the borrower was unable to operate during the covered period at the same level of business activity as before February 15th. That's kind of our line in the sand date, due to compliance with requirements established or guidance issued between March 1st and December 31st of this year by Secretary of Health and Human Services, Director of the CDC, OSHA, Occupational Safety and Health Administration, related to the maintenance of standards of sanitation, social distancing, or any other work or customer safety requirement related to COVID-19. Okay, so that's a lot. What that is saying, in my interpretation, is if you could not get back to your normal level of activity, which is a lot of businesses, right? Like maybe you're a restaurant and you could only operate at half capacity because there are rules that say you have to maintain this social distancing, right? And they do have to be kind of more formalized rules. It says like Health and Human Services, CDC, OSHA, right? Then in that case, if you can point to that and you can document like this is the why I couldn't get back to it. It wasn't just a decline in business. So I think a lot of people think, well, I couldn't get as many clients because of all of this. If it's not due to social distancing, sanitation, all of that, it probably wouldn't count. But if it is, right, then you could probably check this box. Here's the unknown for this, because it feels like this could apply to a lot of businesses. And I think it is meant to be fairly wide reaching. We do not know at this point how detailed they're going to get in reviewing these cases. So you want to make sure you documentation your reason why you think you can check box number 2, because it does seem like a little bit of a catch-all, but you want to make sure you can support what you are certifying. Remember, it's on you as the borrower. They're going to come back at you, not the bank. You're the one that checked that box and said, yep, I can use this easy form because I couldn't operate at the same level because of these standards, right? So this one is the biggest wild card to me around how liberal they're going to be with this definition, right? And what they would require. Now, they're not going to require, even if you use the easy form, you don't have to give them that documentation as part of the application. So you do, however, have to maintain it. What does that mean? That means in case they ever come back and audit these, which they will for some of the bigger ones, they definitely will have a process to audit some of the big PPP loans, which could go on for years, you guys, right? So you got to maintain this documentation somewhere. You're going to remember where it is. That's true for all of this. But that's going to be one of the things that you would have to maintain, but you don't actually have to give them proof of. Same thing, you don't have to give them proof of box number 1 around your annual salary or hourly employees not being cut by more than 25%, but you do need to retain that to be able to support why you use the EZ form. Okay, so document, because you're not going to remember in 3 years if the SBA comes a calling and asking you for this. You're going to be like, that's so far in the history of time, right? That you're not going to remember. So do it now so that you have it, okay? And date it and sign it and just have it where you can kind of hand it on over. Just like an IRS audit, the better documented you are, the better chance you're going to have of not having any issues found with your loan application. But they are going to look at these. Fraud has been shown to be like fairly, I wouldn't say rampant, but they have had a decent amount of fraud cases. Most of those have been bigger and they've been egregious, like basically businesses that didn't actually exist were signing up for PPP loans. So that's probably not you. So you probably don't have to worry about it from that regard, but you should keep all your documentation to keep all your ducks in a row. Okay. Now the full form. Now I haven't put a screenshot of the full form because it would take about 5 slides because it's long. So this is the first application that came out back in, gosh, I can't even, maybe it was May when this application came out. And oh my goodness, it was a doozy. And I remember all accountants across, the United States were just like, how in the world are people going to be able to fill these things out? This is crazy. So I think that's why they created the other 2 tiers. The full forgiveness form is a beast. And this is saying, okay, I didn't do those things. So now I have to do the full calculation. I'm going to have to show them the entire FTE calculation, right? And it actually has a schedule that you list employee by employee and you do those calculations. And so you would have to support it. And it could, depending on your results from that, could reduce the amount of forgiveness that you get. Okay. So I'm going to mention it here, if that's okay, Tom. I know last time the PPP tracker is best for you. If you can fill out the EZ, you may not need it. You can still download it because it could still be helpful. You definitely don't need it if you've got a 50K or under loan. You want this thing if you have a loan that you have to do the full forgiveness application for, because we've We've made it such that you can plug in your information and it will calculate it all out for you and tell you basically the numbers that you need to plug in. And then I've gotten so many people telling me that their banks were just shocked because they just sent them as support that workbook. And the banks were like, this is the most amazing thing, where it just shows them all the calculations. So I want you guys to go check it out, jamietrull.com/PPP tracker. I'll mention it again at the end. But I worked with 2 other CPAs on that. That was hundreds of hours of work put into just plumbing that system. So it will help you simplify it.
And I'm going to interrupt just a little bit, Jamie. The tracker's amazing. There are some kind of quasi resources out there. This thing's fantastic. We've used it for our businesses and companies I'm involved with. It's awesome. It's very detailed, specific. It makes it very, very clear. It lets you know if you are or if you're not, and it helps you just get an understanding of everything. And then, as Jamie was saying, just as a testimony for you, Jamie, that it works. Submit it, get on her mailer list, get connected with what she's doing, because her information is fantastic, and just a great resource. So we've really enjoyed it. I know our other clients and people involved who have downloaded it have that are using it. Can't say enough good things about it. So if you are looking for that extra support, this is it. And then, as she was mentioning about keeping track of everything, this will help you consolidate in one spot, one place, one thing, and create a folder in a shared drive, back it up somewhere. If you're using Office 365, save it in your Gmail account or Dropbox or something, a couple spots, so you've got it backed up, or if you have to, print it out and keep it in a file folder somewhere. Yeah. But anyway, just a quick plug, definitely do that. Yvonne just list that in the chat box, and I'll make sure we list that as well as a hyperlink so that we can make sure you can just click on it, download it, and make sure you get to it right away.
Thank you, Tom. I appreciate that.
Yeah.
I'm glad. It's nice to see now people who are using it and actually applying for forgiveness. I think it was a huge beast to put together, but I love seeing it come to fruition and really helping. So if that's something you need, I definitely hope you download it, and I hope you enjoy it as much as you can enjoy something like that. Okay, just a couple other considerations I want to mention, because these are things that come up quite a bit. Your EIDL advance will currently subtract. So this is not your loan. If you got an EIDL loan, that's separate. Your advance, the $1,000 per employee, also called a grant, right, will be subtracted from your PPP forgiveness. Unless it already was. If you got it, if you had already gotten the grant when you got your PPP, your bank might have already subtracted it from the PPP you got. But in most cases, that wasn't the case. And so your PPP loan forgiveness will be reduced by that EIDL grant. That's something you don't do that when you're filling out the application. They will do that. There's a place you'll see on all the applications that asks you for your EIDL advance number and how much you got. And they will do that. That was something that was written into the CARES Act. And we'll talk about that in a minute, but that might be something that also could change. Because that has kind of been a point of consternation, especially if you got a smaller loan, right? That now you have to subtract that off. So it actually reduces kind of the benefit. It would turn into a PPP loan. You could obviously pay it right away, or you could just keep it as a loan over the 2 or 5 year term, depending on when you got your PPP, and pay it at that 1% interest. But ultimately right now, that's how it stands. We talked about this already. Your PPP forgiveness for owner pay is limited to 2.5 months worth of pay based on 2019. If you're a corporation, that means your actual W-2 wages. If you're a sole proprietor LLC, then that means 2.5 times that Schedule C number we talked about. Okay, so the borrower is responsible for making the certifications. We talked all about that, so I won't go back into that. And once the loan is forgiven, that related interest will also be forgiven. So those are all just important considerations. Now let's talk about what could still change. I've kind of alluded to a few of these things. Tax deductibility. And I could do a whole thing on tax deductibility of PPP loans, but the way it stands right now, the actual money you receive for your PPP loan is not taxable as income. Great, right? That sounds awesome. Yay. Except the expenses you pay with your PPP loan are not tax deductible, meaning you cannot write them off on your taxes. So ultimately that will have the kind of similar impact of essentially increasing your tax burden. So that's something to keep in mind as well. Now, the big thing that's really interesting here, okay, is that number one, that could still change. The AICPA is pushing for changes on that. Also, there has not been enough guidance from the IRS on exactly how that's going to work. Because remember, you have 10 months from the end of your covered period to apply for forgiveness. So if your loan has not yet been forgiven, then those expenses should be still tax deductible, right? It's only once that loan is forgiven that this would kick in. But the timing of that gets a little bit strange when you're talking about this going over years and over tax years. So there's a lot of guidance. We're still waiting on exactly how that's going to work. For now, what I would plan though, is plan your taxes such that assuming that those expenses won't be tax deductible for 2020. If that changes, then yay, you don't have as many taxes to pay, but I would rather people be over prepared and expect that they're not going to be able to deduct those things. And this is only the things you paid with PPP money, right? So it doesn't mean that none of your payroll is going to be tax deductible, just the portion you paid with PPP, right? So it has the impact of reducing your tax deductions by up to the amount of your PPP loan. Okay, and then the EIDL advance, that may change. Some of the drafts of legislation I've seen actually remove the requirement to subtract your EIDL advance from your PPP loan forgiveness. So whether that gets passed or not, we will have to wait and see. That could be something though that might impact your thoughts on timing as well of when you apply. We might have more simplified forgiveness rules and requirements. There's been talk of blanket forgiveness. They took a little bit of a step towards blanket forgiveness with the under 50,000 rule, but they may have even further simplification for loans 150K and under. So that's something to keep an eye on. Again, the stimulus bill has been debated for a long time. When and if something gets passed, we don't know, but we should know within the next couple of months what that's going to look like. And a second round of PPP may become available. Again, that's the same stimulus bill that would come out of, and it may allow people to get a second PPP loan if you are highly adversely affected. So it's changed. The number has changed, but I think the most recent one I saw said if your gross receipts have declined by 35% or more on a quarter-over-quarter basis, that you could apply for a second PPP loan. So those are just things that you want to watch out for, and why this proposed stimulus bill is still something for you to be watching, because it could provide some additional relief or some additional changes or some additional loosening of guidelines. So the big question, when should I apply? It depends on your situation. For most people, I find waiting is totally fine, unless you're a person that gets a lot of anxiety by having that hang over you, in which case go ahead. But for most people, it's probably fine to wait. The only exception to that is if you are in a place where right now you have employees, or you've hired back employees, or you're at a good place from an employee perspective, but between now and the end of the year, you think you may need to lay some employees off. If that's the case, then I would probably apply sooner rather than later. Ultimately, it's best from a quote unquote safe harbor. That's some of these additional rules that they gave to give flexibility to people. The more employees you have when you apply, the better chances you are to be able to reach that safe harbor and not be penalized for those FTE reductions. So that gets really technical into the details. So I do have a article I wrote for Gusto that goes into more specifics on timing of when to apply. That could be good, that I put down here, which is just jamietrull.com /Gusto PPP. So that if this is you and you're trying to figure out what makes the most sense, especially if you're an employer who may be needing to lay people off, or maybe you recently laid people off, I would go read that article, because it's going to go into more detail on that specific point. But for most people, it's probably fine to wait and see how all of these things shake out over the next, hopefully, 2-3 months or so. So, and that's pretty much it. I think the last thing I just had was how to find me. So I've got my YouTube channel, which is just Jamie Trull. Come over, subscribe. I have lots of PPP content. I have EIDL content. I have unemployment. I have a bunch of different content out there for you. You can go to my Facebook group, which is called Financial Literacy for Women Business Owners. Although we do take men, we are inclusive. So we're 30,000 strong over there, jamietrull.com/group. And my website, jamietrull.com. So that's where you can find me. And then make sure you download that tracker if you don't have it already.
Great. Well, this was wonderful, Jamie. Thank you so much. We're trying to post your links in here for everyone to be able to get the additional information and go through it. We did have a couple questions pop up. Let's see. I think you may have addressed it. Let's see. The question is, I'm just short of the 8-week payroll use. I'm easily within the 24-week period. Can I just go with the 24-week loan forgiveness? Also, just clarifying, it does not have to be the exact same employees, correct? Some original employees did not choose to come back, but we hired other employees to cover that job.
Yep. It only goes by number. It does not need to be the same employees at all. And the salary hourly wage, so that conversation about not reducing an employee's salary hourly wage doesn't apply if you hire someone different. So it only applies if you have the same employee, basically. The 8 or 24 week conversation, in most cases, it's going to make sense for people to choose 24 weeks. The only case where it could make sense for you to choose 8 weeks is if you use the money exactly as you were supposed to over that 8 weeks. You were able to use it all up in that 8 weeks, right? You hired all your people back right away, or maybe you had never let them go in the first place. You meet all the criteria for forgiveness for that 8 weeks, but then maybe you wouldn't now, right? Maybe since then you've had to lay off or you've had some changes. So if you did everything as you were supposed to in that 8 weeks, go ahead and use the 8-week period. You can only use the 8-week option though, if you got your loan before June 5th. If you got it after June 5th, you can use, you have to use the 24 week. If you got it before June 5th, you can use 8 or 24 weeks. So it's your choice. And you don't have to opt into that anywhere. I think some people were thinking they needed to opt in to change it to 24 weeks. It sort of assumes it's 24 weeks, but when you make your application, it's going to ask you for the dates of your covered period. And that's where you're going to put in what they are.
Great. Thank you. And one other question, this was just a point of clarification. I think you addressed this, but just a question came up that was asking about, the person said the bank is telling him that he can apply for forgiveness now.
Mm-hmm.
But he's wondering if he should wait because there's still uncertainty. The loan is under the 150,000 number. And it was just, do you think I should apply or wait? What would you suggest?
So I think, like I said, unless you are in a situation where you need to lay off employees, in which case you want to look at that a little bit closer. And you may even want to, the tracker will help you with that as well. But you may even want to, if you've got a bigger loan, it sounded like this was under 150 though, right?
Yes.
So if it's under 150, unless you are in a situation where you're going to be doing mass layoffs over the next couple of months, I don't think it hurts to wait. And see where some of this plays out and see what changes there are. Because I think, again, it's only going to get simpler. The only real exception that I can think of is if you are going to be laying off employees such that it's now going to dip, then you might want to think about going ahead and applying. Just general best case, it's good to apply when you have the most amount of employees.
Great. Do we have other questions while we have Jamie? I know we have a hard stop here. We got to give her a few minutes to get to her next appointment at the top of the hour. So we've got maybe just a few minutes left. Any quick questions for Jamie while she's here? Great. Maybe we had one come through. This was a question about the tax portion again, about how it's going to be taxed. The question is, will any portion that's forgiven be taxed?
Yeah, so it works such that, and this is something that's being challenged. So this is one thing that may change. The way the law was written was that this was non-taxable income, right? You would get the money, but it would not be taxed to you as income. It would be different than if the money came from clients, right? It would be non-taxable. But then subsequently to that, the IRS came out and said, yeah, that's fine. It's non-taxable income, but you can't actually deduct the expenses related to it. Now that sounds bad, but when you think of it, right, you didn't pay taxes on the money that came in. You almost get a double benefit if you also then get to deduct expenses against it. So they wanted to remedy that and say, okay, the money is tax-free, but you have to, then the expenses that you pay with the money are not going to be tax deductible. So it almost has kind of a similar impact on your taxes at the end of the day. So I would do your calculation when you are working with your accountant, or however you do your calculation for determining how much tax you owe. I would go ahead and assume that the amount of your PPP loan, take that off of your deductible expenses. Okay, so it just remove that and say, okay, I made $100,000 this year. I had $50,000 of expenses. My PPP loan was $20,000. So in that case, you can only deduct $30,000 of those expenses, if that makes sense. So basically, by doing that, then determine what taxes you need to be paying in or withholding for your tax bill based on that. Now that may change. And there are, if you're a sole proprietor LLC, you're actually in luck because that doesn't apply to you in the same way. I won't get into kind of the all of the details there. I do have a video on my YouTube channel that does go into it for self-employed and sole proprietors. But ultimately, you want to be assuming those expenses are not going to be tax deductible because that's the way it's currently, that's what the guidance currently says. It could still change. Again, it is very confusing and a lot of CPAs are asking, well, wait a second, what if they got the loan this year and they paid the expenses with the loan this year, but they don't get it forgiven until next year? Well, that's where we're going to get into some interesting timing around what does the IRS have to say, and they have not come out with enough guidance to really know how to plan for that, which is really kind of unfortunate, honestly, because we're sitting here in November and most people want to plan for the taxes they're going to owe. So I just like to say, plan that you're going to owe taxes on, in that way, and that those expenses will not be deductible. And then if it changes, then it's good news, right?
Great. Well, and Jamie, I have just a quick follow-up to that because I've heard some rumblings of beyond the IRS for federal, but really at the state level of states taxing the PPP as income. Have you heard any, I know we've got just a minute here, but just any general rumblings that you've heard?
I haven't really. I would suspect that most of the states will follow the federal treatment. That's usually what happens. If some differ, it's going to be on a case-by-case basis. There will be a few because there are states that like to do that. But for the most part, I'm expecting that most states will follow what federal does. But a lot of them, I don't think, have made those rules yet either.
Okay, great. Well, thank you so much for being here, Jamie. Just a wealth of information and useful, practical ideas and suggestions. And just thank you for helping give an understanding of this whole pandemic crisis support that came through. And here we are months later talking about forgiveness of it and what can and can't and how it all goes. So thank you so much. We greatly appreciate it.
Yeah, I'm glad to be here. I feel like we've come full circle now, Tom.
Absolutely.
Until the next round of PPP and the rules change.
That's exactly right. That's exactly right. Well, thank you again. We are so grateful for your time. Have a great rest of the day. Thank you all for tuning in today on our webinar series, and we'll see you back here next week for our next continuation of the Navigating the Coronavirus Economy series. Thank you so much.
Bye, guys.
Bye.